Good evening, good afternoon, good morning, everyone. Welcome to this segment or the session on OLDN Membership Conversations 2021. And our focus this year is on international forums, where we are going to be having numerous conversations that are guided by the different segments that we represent. We actually serve a field that is multidisciplinary in nature, and as such, the concepts, the theories, the values, and the practices that we advocate for apply in all sectors of the economy, and they are relevant for the growth and development of any sector of the economy. So today we are starting off our international forums with a focus on banking, accounting, finance, and economy. And most of you will agree with me that the banking sector and all these other sectors play a significant role in economic transformation. No economy can survive without a robust and viable banking system. So the conversations that we are going to be having on banking, accounting, finance, and economy are anchored on facilitating economic transformation and the application of organization development, leadership, and sound governance across these different sectors of the economy. We are the Organization Leadership and Development Network, and we exist to ignite insightful conversations. And we have a lineup of speakers who are going to take us through some of the topics that are going to form part of the global OLDN report on banking, accounting, finance, and economy, and the application of OD leadership, sound governance, change management, and all the related fields into these four segments of the economy. And I will leave that to Mr. Priority to speak into the presenters. And today, all our presenters are OLDN members, as this is day one, and tomorrow we'll have day two of this particular session. And apologies came from Madam Wimbai, who is having some issues, and she will be with us just as a participant. Same with Dr. Dotun, who is running around to resolve some issues, and he will be with us probably as a participant today or tomorrow. And our focus is on multidisciplinary conversations to leading sustainable strategic change. And with me to co-facilitate this program is Madam Wadzanai Mukumbuzi, who is actually in Zimbabwe, and she will say something regarding the significance of the BAFE segment of OLDN. Wadza, are you there?
Good evening, everybody. So as we are moving forward with preparation of the global OLDN report, we are starting off our sessions with the banking, accounting, finance, and economy session today, for which the significance is to be able to produce the actual global OLDN report, and at a later date we'll be able to have a conference and present multifaceted areas, different multifaceted areas that will be discussed today that are affecting the banking, accounting, and finance and economy segments in all of sub-Saharan Africa, that we can have to ignite insightful conversations that we should be able to, so that we should be able to bring transformational change in whatever we do in our different segments. So this is the purpose of this meeting that we are having today, these conversations with our different speakers.
Thank you so much. So the whole idea is to ignite insightful conversations and the application of whatever we do in the banking, accounting, finance, and economy sectors. And this is open not only to OLDN members, but also to people outside of OLDN, as we take a multidisciplinary approach to whatever we do. All our members in OLDN, we focus on getting them as consultants who cut across sectors and apply evidence-based practices to whatever they do. And the profiling of members in that respect is what we are doing with the international forums that we are initiating today. So we have Mr. Priority, who is the coordinator of this particular segment, and it's one of the 8 segments that we have as OLDN. And this is the first segment that is going to take us through these particular conversations in terms of advancing the OD field. And what we want to see is results-based practices. And those who are in banking, in accounting, finance, and economy need to demonstrate that element in the different banking institutions or financial institutions they are working in, or other organizations that they are working as finance professionals. We also need competency-based learning, which develops skills to add value through the financial service that those in these particular services or sectors do offer. Impact and influence-driven models. Those who are in this particular segment need to make significant impact and influence in their organizations and position banking, accounting, finance, and economy as a significant pillar for economic transformation. Relational and conversational practices. These are some of the key determining elements of the banking and finance sector, and also OD-informed engagements. So we're going to see these evidence-based presentations as our preliminary conversations to this particular segment. Again, I formally welcome you to this particular conversation. We are the Center for Organization Leadership and Development, and we are facilitating these conversations as Organization Leadership and Development Network. I also see we have people on Facebook. We have Mr. Walter Nyakanyanga is following us on Facebook. Same with Madam Wimbai Gorogodo. Thank you so much for joining us, and all those who are watching us from there. Dr. Shimba, are you there?
Good day, Doc. How are you?
Thank you so much. It's a pleasure.
I hope I'm audible enough.
Enough. You are very much audible. It's
right.
My pleasure to be introducing you today to our OLDN Banking, Accounting, Finance, and Economy segment. Dr. Shimba is actually my supervisor, my PhD supervisor. So he's a mentor to me, and he's someone who has an economics background and has extensive experience within the Zambian banking sector and in other countries. He's actually leading this particular segment and will be guiding whatever reports that we are going to be producing. So Dr. Shimba is working closely with Mr. Priority and all the banking, accounting, finance, and economy members. We appreciate you, and it's good to have you. Over to you, sir.
Thank you very much. Good day, everybody. Okay, so I wanted to discuss a topic that I feel is very important today. The topic, financial inclusion. I want to discuss financial inclusion as it relates to Zambia. And to start, I want to start by mentioning the reason why financial inclusion is important today and its contribution to the economy in general. As a way of starting, I want to mention that there is increasing literature on the relationship between financial inclusion and poverty reduction. Of course, in the same vein, there is also growing debate on whether indeed financial inclusion does reduce poverty or lead to poverty reduction, and also brings about equality in income. PAC-C did a study and found that access to finance is actually positively related with economic growth and employment. They also say in their paper that though the causal relationship between these two variables are difficult to establish. Nazam, Karim, Rahman, and Samidi also came up with results that showed that threshold effect of the financial inclusiveness, the growth, that is the relationship between inclusiveness and growth, was positive. The positive effect was more pronounced at higher levels in financial inclusion. So in their paper, they encourage policymakers to actually support financial inclusion, because as more people are included, the relationship between financial inclusion and growth gets even stronger. A presentation at Bank of Zambia found that enhanced financial inclusion in various countries had shown that there was a contribution that financial inclusion made to wealth creation, economic growth, and sustainable development. Abdullah and Kazo showed some robust evidence that financial inclusion significantly reduced poverty. That's poverty rates and income inequality in developing countries. Their findings are similar to the previous finding, where they say the findings were in favor of further promoting access to and usage of formal financial services by marginalized segments of the society in order to maximize society's welfare. So we see here that we can conclude that financial inclusion is believed to aid inclusive growth, economic development, and financial deepening. That is via the expansion of poor people's access to services, thereby increasing their economic opportunities and improving their lives. So then, what is financial inclusion? A good way of starting. So there are various definitions, a lot of them actually. Different authors, different reports define it in different ways, but all of them are talking about the same thing. Some of the definitions I picked, in broad terms, financial inclusion is a process of providing banking services to the poor of affordable cost, which improves their life. Financial inclusion or broad access to financial services is defined as an absence of price or non-price barriers in the use of financial services. Other definition, financial inclusion connotes all initiatives that make formal financial services accessible primarily to low-income people. Financial inclusion is the provision of appropriate and quality financing that is both accessible and affordable to low-income and other vulnerables. There's also a relative definition. We can look at it on the other way around. That is financial exclusion. We can say that this refers to individuals who use no formal or informal financial products or services to manage their financial lives. Or we can say financial exclusion is broadly defined as the lack of access by certain segments of society to suitable, low-cost, fair, and safe financial products and services from mainstream providers. But then there is a new dimension to this definition. So basically, definitions and measurements of financial inclusion have evolved from classifying individuals or enterprises according to just whether they're included or excluded. Now, there's a view that financial inclusion should also talk about the accessibility, the usage, and the quality. Yeah, because it's not just enough to have access to financial services. Like Priority was saying, talking about social capital, there are times where you have access to a financial institution, in this case, a bank, but you don't feel the customer relation. They actually drive you away. I'll talk about some of the challenges that financial inclusion has relating to the behavior of some commercial banks in their quest to rationally make profit. Some of this aggression they may have actually drive away what ordinarily would have been their customers. So I've put a diagram there just to show and define what access is, usage, quality. We are saying access is availability of formal regulated financial services, whereas usage is actual usage of the financial service and product. Quality, these are products well tailored to clients and client needs. Okay, so the clientele, a commercial bank's customer or a non-commercial bank customer are not the same. Okay, there are some who are less educated, some are more educated, but then the provision of this service should meet all types of clients. That's what quality means. So some of the barriers to financial inclusion, I just put some there. The low access to financial services, this is the general one. High cost of financial services, some just to hold, an account, what they call book balance, maybe beyond reach of some people. I mean, the book balance would be 2 months' salary for some people. So those are some of the things that drive away or keep away certain people from being banked. Poor disclosure obligations. I think in detail we'll talk about this when I talk about some of the behavior of commercial banks that basically drive away or works against increasing financial inclusion. There's also poor credit culture. Usually, some people stay away from accessing finance because sometimes the culture may be bad. There's also weakness in the regulatory environment for non-bank sector. In most countries, I know now central banks in most African countries have come up with departments that supervise and regulate non-bank financial services. Previously, the concentration was on the formal bank services. So this was one of the challenge. So I've just put in form of a diagram, the barriers. We are saying that physical access barriers, sometimes it may be distance, access to banks by some people who live in remote areas may take 2 days to reach. The situation here in Zambia, we know the situation in some district where the bazaar of a school needed to travel 3 days to go and get money from a bank to come and pay salaries of teachers in that remote area. So you would start off, the following day he withdraws the money, the third day he travels back, so 3 days. So those are some of the physical barriers to accessing finance. It's time also. The brick and mortar type of banking, Priority mentioned now that banking is changing. We may be, accessing banking services, which is happening now, away from the brick and mortar. Sometimes just the way the building is, Barclays Bank, sorry to mention some banks, Stanchart, I'll mention several, so that I'm not putting any bank on spot, EcoBank and so on. Just the way the building is drives away clients, okay, just the glass and so on, but also the time, okay, the time it takes to be on a queue and so on. Whereas when you go to a mobile service provider, within minutes, you have sent your money or received your money. So mobile service provision is one of the innovations that is increasing financial inclusion. Mode of transport and so on. So here I'm just showing on the left a situation where a person is unbanked, okay? So that is have no basic bank account, have no access to financial services, or rely on a cash economy. You know, you put money in a tin as a way of keeping your money, okay, or behind the pillow. Yeah, so what financial inclusion means is to encourage what is happening on the right. So it's a desire to move all those people that are on the left side to the right side so that they become banked. And then when they are banked, they can have services of savings, okay, credit, they can borrow, they can make payments, they can access insurance, and also remittances. At that time, we are saying that this person is banked. So I wanted to talk about the why the trouble to discuss financial inclusion. Why have nations in Africa and around the world, the Asia, why the trouble to discuss financial inclusion? What is the rationale? So it's been observed, for instance, Africa, over the years, except now, of course, because of the issue of the COVID, but over the years, Africa's GDP has been robust. Actually, it's above the world average. And yet, this GDP growth has not translated to reducing poverty, okay? And the prosperity has not been shared by many, okay? Growth is yet to provide low-income households and other vulnerable groups enough opportunity to improve their living standards. The 2020 African Economic Outlook highlights that Africa's economic growth at 3.4 in both 2018 and 2019 was less inclusive. You know, they are alluding to this fact. Only about a third of African countries achieved inclusive growth, which is able to reduce poverty and inequality. So this is how, despite the growth, very few, the vulnerable, the marginalized have not benefited from this growth. So examples of this are the economic performance for North African countries, which have been very impressive. But you see, the young, low-income earners and other vulnerable groups have been excluded from employment opportunities and other means of generating livelihoods to enable them to exit poverty. Okay. Also, the many stories we have watched on news, the fatality on the sea of some African youths in their quest to reach Europe for greener pasture, also point to the fact that the growth that Africa is enjoying has not reached them. Here, I'm just showing how that for a long time, 2010 all the way through, including the projection, GDP for Africa has been above world average. So we're also saying that, you see, the banking industry in Africa has shown tremendous growth in volume and complexity over the last decade. Okay, but despite making these significant improvements in all the areas relating to financial viability, profitability, competitiveness, the much needed banking services have not reached a vast segment of the population, especially the underprivileged sections of society. So this is a reality check. Okay, what happened in North Africa was a reality check by most policymakers. Okay, so they decided to embrace more inclusive policies. It was an eye-opener for the development of communities in Africa. So there was a call for a clear paradigm shift, okay, which should result into more inclusive and sustainable growth. Most of the interventions some of the interventions include the African Development Bank, which launched a 10-year strategic 20 to 22 strategic plan. The main thrust here was to bring inclusiveness and encourage green growth. Also, the G20, when they noticed the headway being made by countries that were proposing financial inclusion, okay, the leaders issued their first pronouncement in 2009 on financial inclusion, and the following year endorsed 9 high-level principles for innovative financial inclusion. The 2011 Maya Declaration, this is where Zambia, the country that I'll be casing, draws its strategy. So the Maya Convention, this was a convention that took place in Mexico, where countries made certain declarations to achieve milestones in the coming years. For instance, for Zambia, their commitments in the Maya Declaration included raising inclusive levels from 37.3% at the time this meeting was being held to at least 50% in medium term, that is 2017. They also committed themselves to provide affordable and appropriate financial services to all districts in Zambia. They also remained committed. They mentioned that we remain committed to research-based financial education strategy process. There was a catchphrase that they were using: if you can't measure it, you can't plan it, and you can't therefore fix it. So, of course, the map of Zambia there, I'm showing some figures, some quick figures. So the size of the country, 752,000 square kilometers. The population currently is up at about 17.9 million people. GDP, the total is 23.9 billion. If you deflate this with the population, you find that per capita is $1,307 per person per capita. Total adult population, it's important because of the way research or what financial inclusion considers. So financial inclusion, in finding out how inclusive the population is, it only considers adults. And the definition for adults is anybody 16 years and above. And in Zambia, the adult population is 9.5 million. So the difference from 17.5 million, all those are below 16. Okay, of the adult population, 53.4% live in rural areas. This is important information for financial inclusion. 46.6% in urban areas. Whereas of the total adults, 52.6 are female and the difference are male. I've mentioned this was during the Maya Convention, the commitments that Zambia made. So the information I'll present here is on the demand side of financial inclusion. So the supply side is easy because the supply side usually is obtained by central banks who are supervisors and regulators of bank and non-bank financial institutions. So that information, they have it. They will tell you how many clients are available, how many of those are female, and so on. So that information is readily available. But the demand side is basically on the client side. And in Zambia, like most countries, these surveys are done, I think in Zambia, I think it's 5 years, every 5 years, to find out what improvement is there in financial inclusion. So a survey done in 2020 in Zambia by FinScope, Financial Scoping, found that financial inclusion increased by 10.1 percentage points to 69.4 in 2020 from 59.3 in 2015. So they had already passed their commitment made at the Maya Convention in 2021. 71.2% of males are financially included compared to 67.9% of females. So we see more men financially included than there are women, adults. So 83.8% of adults in urban areas are financially included compared to 56.9% of their rural counterparts. Formal financial inclusion increased to, that's the formal one, so there's informal and formal. So the informal one usually, the informal one is village banking, things like the Shylocks, people who go to unregistered people to borrow money. In the local language here, we call them Kaloba. Those are the informal examples of informal. So the form of financial inclusion increased to 61.3% from 38.2 in 2015. Here I've just put some definitions of what DFS stands for and what it is. That's digital financial services. Okay. Then we have financial inclusion, which we have defined severally up there. Financial exclusion, which we have also defined severally. We have mobile money. This is one of the major innovation to improve financial inclusion. These are services provided by a financial service provider that allows its customers to conduct financial transactions remotely using a mobile device. Some demographics of the adult population in Zambia. So we have those graphs there, the urban-rural distribution. So the urban adults are 46.6. We looked at it up there, rural. Then we also have gender, which we have already looked at there. Then here we are looking at the adult population compared to the youths. I mean, adult population broken down into older and the youths. So we see that 16, which is the definition, the limit for defining adult, 16 to 25 are the majority in Zambia. Okay, the life begins at 40. They're only 17.1 and 9.5. So the majority are the youths, and these are the ones that you need to take care of. Growth need to translate to benefits for the majority of these youths. For those that have interest in politics, that's a group that you need to look at. Yeah, this pie chart is rather a very thought-provoking and sad pie chart. I looked at several countries. This is similar. So it's showing a distribution of adult livelihood activities by income. If you look at the biggest portion of the pie chart, biggest piece there, 25.5, what those are adults who have no income. No income at all. They rely on family and friends for money. So this is one of the challenges of financial inclusion. But looking at what we have discussed above, financial inclusion is able to bring these people into the fore. Then we have 25.3%. Those are salaried wages from companies, businesses, and mostly government. These were the findings of the FinScope survey. So trends in financial inclusion, we see between 2020, 2015, and 2009. So 2009, there were only 37.3 banked adults. This increased to 59.3 in 2015 and to 69.4 in 2020. Then the breakdown, adults formally and informally included. So this is financial inclusion, but some informally. Okay, they have access to village banking and all those informal financial inclusion. So 8.1% are in informal, 37.2% are informal, 24.1%, these are in both. We have people that, of course, are formally banked, but also participate in these village banking and other financial services provision. That's a breakdown between the rural and urban. Okay, urban adults are 83.8%, whereas in the rural, 56.9%. The other one is total adults. Okay, so one of the activities conducted to support financial inclusion is financial literacy. So this is a time where in the case of Zambia, and I think in most countries, the central bank chairs this through various financial institutions. They go out in the community, what we call in Zambia the Financial Literacy Week, to just educate people on finances. Every year you have a theme. So the belief is that the more people are aware on how to manage finances and what financial services are available, the more you're encouraging them to be banked, and that's increasing financial inclusion. It refers to awareness and knowledge of key concepts required for managing finances. The rest are graphs. They can be, you can go through them, but in conclusion, I would want to mention that there have been constraints to the achievement of financial inclusion. Okay, the financial institutions themselves, by the nature of their work, in wanting to be rational, to make profit, have sometimes driven away the would-be clientele. Okay, this is mostly in some of the hidden costs. Just to withdraw your money, okay, they charge you. There was a circular like here, which was issued that encouraging people to withdraw money via ATM. Over time, again, ATM, you realize that there are some costs. So these would drive people away. So what the central bank did in Zambia was to issue a circular to all commercial banks, removing several of these costs, which the central bank believed was negating their efforts to increase financial inclusion. Okay, other things that drive away clients are unclear terms and conditions when providing their services. When obtaining loans, you find that there are certain terms that they want to explain to you, and this is where social capital comes in. It's important that you provide very good client, customer relation with these clients. Usually, a commercial bank will be very smiling at you when you want to get a loan, but once they give you that loan and they start demanding payments, you don't see that smile anymore. The other challenge noticed is the abuse. It may not be the right term. There are the abuse of the Credit Reference Bureau. There are some clients who suddenly want to access some service. You are told that your name is on the list of bad debtors, and it could have been a mistake. Okay, that a commercial bank put your name there. But also just to remove your name there, there is so much bureaucracy. So those are some of the things that drive away the clientele. Thank you very much. I now invite discussion. Thank you.
Thank you so much. Wanza, you can take it up.
Thank you, Dr. Shimba. I'm just going to comment on what I observed in your presentation, which was really packed. And I cannot unsee, I'm in Zimbabwe, and I cannot unsee the uncanny resemblance between the statistics that you provided for Zambia and what we have here in Zimbabwe. And I'm looking at the progression, also how it is from social capital through to financial inclusion, because most of the problems that we're having between the banks and the people who are obviously unbanked is as you alluded in your conclusion, that most banks are in it for the profit, which really drives away customers. And looking at the current trends that are taking place in the banking sector, we will see that whilst banks want to cut on perhaps most of their staff, closing banks and all, bringing in technological advancements, maybe the mobile systems, internet bankings and stuff, most of the people that are unbanked do not have the systems. And this is something that really adds on to financial exclusion. And user experience is very important at this point because it just drives away people.
Very
this
true.
is my comment.
Okay, very true.
I don't know if there are any questions to the presentation that Dr. Shimba has given.
Yes, maybe Mr. Timmy can make a contribution from Nigeria. Mr. Timmy. Yes, Mr. Timmy, you are muted.
Good evening, all.
Yes.
Good evening, Doctor.
Thank you.
Yeah, the presentation is well put together, and I learned a lot. And the area that made me a bit shocked was the pie chart that shows the percentage of people that are dependent and they are unbanked. They are not financially included. So it's insightful and it shows that there's more work to be done. And probably with what OLDN is doing, there will be more insights to those who are in the industry as to more grounds to be covered. Also, in the conclusion, we can see that there are some bottlenecks that may not allow the vision to be achieved. So it's important for financial institutions to focus on the big picture rather than putting in place some policies. Yes, as we can see here, like hidden costs and things like that. This is exactly what is causing a lot of problem for certain people, even merchants. In terms of this fintech we are talking about, some payment gateways and the rest of them. Some people are not happy with certain hidden costs. Some are unhappy with the timeline to complete a transaction. You know, sometimes there are delays, and some others also complain of the ease of carrying out these services. Some want the transaction to be as simple as maybe using just your bank account. Sometimes they request for so many details that you even become uncomfortable. You know, you feel exposed when they ask you to bring your card, long number, the CVV, and so many others. And some people have, through this, fallen into the hands of fraudsters. They want to make some online financial transaction again, and they see all this, they will be scared. So it's important to simplify how to bring in the unbanked into the banking system and to make the process very, very simple. Some are even looking at doing this without even subscribing to data, maybe even through just your phone number. You know, you are able to carry out some financial transaction. Thank you very much, sir, and all.
Thank you. Dr. Shimba, the point that Mr. Timmy mentioned is, if we look at this pie chart, where 50.8% are dependent on family or they are salaried. And if we look at it from an African point of view, those who are salaried, the salaries are not even enough for them to access banking services. How then do we create a balance when we have the majority of our population dependent on families or getting salaries, but the salaries are not even enough for them to save a penny?
Very true. In fact, this is what has negated investment, because if you look at the few that are on salary taking care of the many, so there's not much left to sell or to invest. But in the papers on financial inclusion, like I said, it's still a very big debate. There's a belief that through inclusion, bit by bit, some of these people that have no salary, say if they form cooperatives, they form village banking. He has no money, he borrows from the few that are working. Then there's a belief that, because ordinarily you need to go to a commercial bank, to get a loan and start business. But because of the costs at the bank, which most of these people who have no salaries may not meet, so it's believed that some of these informal financial services may help these groups migrate from where they are to the red segment there. That's a belief. But it's a very sad situation when you look at it. This is the reason why growth is slow, because basically when we get a salary, apart from eating part of some of it, providing for our household, you want to invest in a small business and employ 2 people, but that is taken away because you have to help others. Thank you.
Thank you. And I think that's the issue that is going to be discussed tomorrow by Professor Muhammad Sabri on financial empowerment in order to move these dependent into the salaried into becoming economically active and to invest. There's a question from Kuzanai, and I believe it's Kuzanai Nkata from EcoBank, and he's saying, is financial inclusion confined to poor or marginalized society only?
No. Some paper, some study I looked at talked about financial inclusion in the middle income countries and some of the developed countries. So it's not necessarily the poor, but there are also people that have a belief that you don't put your money in the bank. I think for reasons, some of the reasons that we talked about, that Timmy also went through. Okay, and so instead they'll invest their money in assets. Okay, or they would rather give a friend, you give me back with so much %. So financial inclusion also tries to target those people. And in the case of Zambia, where the central bank took a step to reduce certain of these costs that these commercial banks charge their clients, this was the idea, to encourage those who are not poor but have money and would rather keep them in their homes to bring the money to the bank. In my country, and I think in several countries, there is a certain group of traders who actually keep money in their homes, okay, for various reasons. And so you realize that those are not poor people, okay? So they own shops and basically take their money home. So the idea is, if this money can be banked, can be brought into the financial system, it will boost the financial system, and this money can onwards be lent to some of the 25.5% of the population. Thank you. So it's not meant just for the poor, though that is a main target, to help the poor migrate away from their social status to a better one. But it includes even those that are knowledgeable, those that have money, so that they become banked. Thank you.
Thank you so much. And lastly, I will ask Kuzanai, I understand you are working in accounting. Just in maybe less than 2 minutes, the issue of banks focusing more on profit. As an accountant, what would be your contribution to that? Banks focusing more on profit and at times doing away with these social investments. Kuzanai.
All right. Thank you, Doctor. For banks, I think it's a difficult question in a way, because you understand the main purpose of them being in this business is to make profit. So to focus mainly on social responsibility or social capital they won't be able to meet some of their cost. Like there are some fixed cost which needs to be met on a monthly basis. So for them to focus on social responsibility would be sort of like they would be diverting their main objective, because you understand, for every business, its main objective is to operate profitably. So in a way, for them to focus on social responsibility, it's a bit of, they will be diverting their main objective. That is, the main objective of all businesses or banks is to operate in a profitable manner. That's my understanding.
Thank you so much. And I will ask Mr. Priority to also talk about it when he's presenting Ms. Gloria's paper on how to create a balance between making profit and meeting these social demands. Thank you so much. And thank you everyone for attending today's session. I hope to see you again, if time allows, tomorrow as we finalize this preliminary conversation on OLDN, banking, accounting, finance, and economy segments on that respect. Thank you everyone. Have a good night and or enjoy the rest of your day.
Thank you very much.
Thank you.
Thank you. Asante sana.
Thank you.